Hi, this is Lee Thurburn, and I have the pleasure today of visiting with Carlos Cantu, who is he is an incredibly knowledgeable guy when it comes to all things insurance, property and casualty, commercial insurance, the kind of stuff you should be concerned about. And so today we're going to talk to Carlos, find out a little bit about him, and find out what's going on in the insurance world today. Welcome, Carlos. Glad to have the chance to visit with you. So tell us who you are and how did you get to where you are today?
Thank you, Lee. My name is Carlos Cantu. I am with TWFG Insurance. I am one of the first agents with this company back in 2002, 2003. One of my specialties is the commercial insurance because it's one of the least looked at, valued at as far as insurance policies. There's a lot of areas where agents try to cut corners or the clients are cutting corners, and then all of a sudden there's a claim and they end up with either not enough coverage or lack of coverage. So my specialty is to try and help people understand what they do have.
So you said you joined TWFG back in, was it 2003? Is that what you
I
said?
think so. It was either 2 or 3.
So tell us about that journey. How did you get to TWFG? What did you do before that?
I was old school. I was an Allstate agent. Prior to that, I started back in '84. And at that time, it was mainly personal lines that I was doing. I always have had an interest in the commercial side. I was always intrigued by it because there really is no two clients the same, even if they're in the same industry. And one of the things I realized is the service side was always lacking. And what I mean by that is a lot of times these contractors have to have a certificate of insurance. And back then it wasn't uncommon that it would take a week to get a certificate. And so what I started doing is by processing those requests within 24 to 48 hours, I was able to show the clients that they actually have the capabilities of getting it there because they're waiting to get started on a job. And over time, I've learned the different type of commercial exposures out there. I mean, there are hundreds, if not thousands, of different variations out there, and it takes a lot to know it. So it's kind of like you have to focus down a little bit, otherwise you might be, a jack of all trades, but a specialist of none.
So tell us about the journey with TWFG. That was pretty close to when they formed up as a company. Now they're out of the Woodlands, just north of Houston. Is that right?
That's correct. Yeah, actually I think they were only about a year, maybe 2 years out since they had first started. I have been there from the get-go. As a matter of fact, at the beginning, commercial was not even a possibility because it was still so new to the company. And at that time, the owner of the company basically said, if you want to do commercial, you're on your own. And that has proven very useful for me because it forced me to step out of my comfort zone and go try and understand what's going on.
So what attracted you to the Woodlands back when now I know they're a much bigger company now and there's benefits, but at the time you left a well-known carrier group and went with this little tiny thing called the Woodlands. What attracted you to them?
Believe it or not, it was the owner. He's very pro sales, pro agent. And what I mean by that, they understand what it takes just to do business. It's not like a cookie cutter. Like when I was at Allstate, they had one type of product and you either sold it or you didn't sell it. As an independent, you have the opportunity to go out there and find different companies that can possibly help for it. For example, on a contract, let's say it's an electrician, you might have under my original contract with Allstate, I would only have one opportunity to quote them, and hopefully it was attractive enough for them to do it. Being with the Woodlands, I was able to go get multiple carriers, and over time, you start learning which carriers have the best coverages, which have the best prices, and you learn to mix and match and see what works out there. But at that time, the biggest reason coming over was the owner. He was very open to what the agent needs, and he still is. I mean, this is the one thing about this company, it's why we continue to grow, is that it is very pro-agent. I mean, in other words, he's getting us the products, the resources that we need to be top-level agents.
So now talk a little bit about how the Woodlands has grown over the years. A small company 20 years ago, now it's not a small company. Talk about what the evolution has been like with the Woodlands.
being in the front end of this whole thing has been quite unique where, and I'll use the word conventions or annual meetings. One of our favorite things was every year they would get a get together. When we first started, there was another agent out here in Grand Prairie. Him and I were basically the agents because the rest of them were in his office. So we would go down there and have like a lunch, 1 or 2 hours, go down there and then come right back. That was our convention. Now the convention, when we have it together, it's usually during the summer, except for this year. We have now close to 400 to 500 people when you include the agent, his staff, and everything else involved. So, you know, I think there's close to $750 million in premium that's being generated by all his companies together. So we've gone from nowhere to one of the top 10, top 20 agencies in the country.
So now, are you what's considered personally, what's considered an independent agent, even though you're with the TWFG group?
I call this a new hybrid, and it's happening out there with others. And we are an independent agent, but we only write the products that are associated with the Woodlands, not just, in other words, we can't just go out there and write a policy with somebody else out there because, you know, we want to make sure our errors and omissions policies take force. We're all under the same standards. I mean, one of the biggest challenges independent carriers have is making sure everybody's following the rules. And under TWFG, we have a set of rules, how we're supposed to do it, what we got to keep for our records to ensure that everybody knows what everybody's getting.
So as opposed to being a captive agent where you only write policies for one company, and on the other side, as opposed to being an independent agent where you can write policies with pretty much anybody that you want to, you're kind of in between where the company provides a vetting process and a relationship with a variety of carriers. And within that portfolio, you're independent in that you can write the policy that's with the right carrier within your portfolio of carriers. Is that kind of what I'm hearing to be correct?
Yeah, exactly. Yeah. Instead of having just one in that little basket, now we have 20, 30, 40 different companies to pick and choose from.
Okay. So what's the benefit that somebody gets from dealing with TWFG? I mean, every company needs a competitive advantage. So what do you think TWFG's competitive advantage is that they give you in the marketplace?
One of the things that I've seen over the years is access to markets as we need them. And I'm not going to say that we're going to get every single one because the carriers still have to approve us. But because of the size of TWFG, these independent insurance companies look at us and say, hey, there's a possibility of getting a sufficient amount of business on there. Because the one thing carriers do not like is an agent comes on board and might write one or two policies a year. That's just not worth their time anymore because they need the volume to justify the cost of having that agent on board. And under TWFG, because we are in, I think, 30 or 40 different states now, they're getting different carriers for different regions. So that makes us look a lot better on paper, especially because you have an agency that is approaching the $1 billion mark. So it gets them excited at the possibility of new business.
Let's bring this down to the business client that you're after, and let's talk about you and the value that you bring to the table. I know a lot of insurance guys and gals, and certainly you have no lack of competition. What is it that differentiates the service that you, Carlos Cantu, provides, and what makes you, I guess, a better competitor? I mean, what is it that you bring to the table that's different?
Well, first and foremost is my staff. I have a great crew that works with me that is not only experienced, but knows how to get the job done. One of the things that we really stand out compared to other agencies is we know how to get them the right insurance and at the right price. And what I mean by that is you'll get too many times you'll get these contractors come in, for example, and they'll give a list off of different things that they need to see or that they need to have. And after having a discussion and having the experience, I can sometimes say, look, you need to talk to them because you really don't need this, you don't need this, or you do need this. When they deal with us, because we are knowledgeable about the products that we are doing, we save them a lot of time. In other words, we don't have to become educated. A case in point, right now we have this group of contractors. For example, if you've ever bought an appliance or furniture at one of these big stores like your Lowe's, Best Buys, at one time I could say Sears, but they're long around. The guys that come in there, yeah, I know Sears, that's the old terms now. These guys that would come into your house and do the installation, those are the clients I'm getting. And I have been working with them close to probably 9 or 10 years now. I know their insurance requirements. I know what they need to get it done right. And I don't have to ask them to teach me what they need. And as a result of that, these logistics companies have come back to us and directly referred the clients to us. We don't even have to do anything because they know if we can get them qualified, we'll get the job done right the first time. And that's the key, because you can submit all you want to have of the policies, but if they don't meet the criteria that this carrier, I mean, these logistics companies are looking for, they still can't work. Now, because we are straightforward with them, actually, we have discussions with some of the head honchos of these logistics companies, because everybody's got to win on this situation. In other words, the carriers have to be profitable. The guy that's doing the installation has to be profitable, and I have to make sure my loss ratios are in line, because if we have too many claims, all of a sudden we'll lose a carrier, and that has happened. Fortunately, we're able to rebound and go to other sources out there. So again, that's the difference between what we have and what may be a lot of other independent agents out there. We have the resources to go and try to find a solution.
What is the thing that Carlos spends most of his time working on these days?
It's called learning to work indoors. No, it's kind of, I've almost had to go back and relearn how to bring in business because of the current situation out there. A lot of people are either shutting down, not doing something. So you have to go back and reinvent yourself. That niche I was talking about, they're still there, but it has slowed down tremendously. So what I've started refocusing again is back to contractors and seeing if there are certain groups that need certain things at a higher level than what they're getting. And as it turns out, again, my job is to bring the business in, and I've got the staff to help me complete the business. In other words, I want that contractor to feel comfortable with me as well as whoever else I have working on a policy. And at that point, it usually works out well. I've got some incredible people in my office that they can answer pretty much any question that you want.
So you are your own business owner. You run your own agency. You have some employees. Now, from a business model perspective, I'm just curious, does TWFG take care of all the payroll, or do you take care of the payroll? I mean, these are your employees, right?
Correct. They have nothing to do with our payroll, our employees. We're just accessing their market for the insurance carriers.
So you're running your own independent business. How many staff do you have? How many people on payroll?
We run between 6 and 8 additional people in my office. I say in my office in this day and age, in my office or out of their homes.
Right. So, hey, that's not an insignificant little business. I mean, it's having 6 to 8 mouths to feed. That's a pretty hefty responsibility. What keeps you awake at night? What kind of stuff do you worry about?
Keeping my staff, make sure that we have enough business to justify versus the income coming in. And so far, it has worked out. The other thing is making sure we're keeping up with what is out there, because if I don't pay attention to what the carriers are doing, and this recently was happening, I realized it in time, but you may have one carrier you think, hey, they got the best rate for this certain contractor. But lo and behold, you got a couple of others that enter the market and they're 30, 40%. I mean, that has happened on my electricians, that has happened on heating and air conditioning. So there's about 2 or 3 categories, and this is just what I've been focusing on, because I can't take it out to too many categories or, trying to keep up with everything. But I have seen that the market's change, and that is my job as the owner to keep up what's going on in the whole situation.
So, I'm going to switch topics a little bit. We live in a really interesting time. So many things going on this year. and I look around at what's going on, and I think about insurance. And my understanding of how the insurance industry works, it's basically a statistical correlation-driven business. You try to predict what the future is going to look like, and then you charge to cover the risk associated with it. For example, if somebody asks you for insurance and you're going to ask them, do you have any 16-year-old kids that are, in your family? If the answer is yes, it's going to go up a little bit. If they happen to be males, it's going to go up a whole lot more because we all know 16-year-old guys are idiots when it comes to driving cars.
No, they know everything.
And they think that they think they're all AJ Foyt and Mario Andretti all wrapped together. I know that I'm talking about myself when I was 16, but I think that's true. So, an insurance agency looks at the correlation between various factors to assess risk, right? So, you'll look at things like how close are you to a coast, and does that coast have a history of hurricanes, right? And if so, that raises the rates. You'll look at how are you in a floodplain, and what's the probability of a flood occurring, and that if the answer is yes, we are, and the probability that raises the rates, right? So, right now, if you were to look at and I'm thinking as the underwriter because you don't set the rates, but if you were to take two pieces of business that were otherwise identical, and one of those businesses was, and I'm talking square footage, value of inventory, tenant finish out, all that kind of stuff that relates to a business. Two otherwise identical businesses, one of them in downtown Portland and one of them in downtown Frisco, Texas. Would it be reasonable to think that because of the unrest and the rioting that's going on, that the one in Portland would probably be assessed a higher premium? Is that a fair assessment?
Initially, no, but what they do to offset that risk is they'll shut down the business. In other words, they'll say because of the riots and everything like that, there's a ban on writing new business. Now, existing businesses, they're still covered. There's no question about that, but they may not take on new business in that area like that right now.
So essentially what you're saying is that two new businesses being started, one in downtown Portland and one in downtown Frisco, and that's a little bit of a miscomparison because downtown Frisco is nothing compared to downtown Portland. But let's say downtown Dallas, which doesn't have as much of a history of the riots as Portland does. Would it be likely to say that the Portland would either be denied coverage or would be paying a higher premium than a lower risk area like Dallas? Is that a fair statement?
Yeah, it's a fair statement because here's the situation. In the insurance business, there's two types of carriers. They refer to the first one as the standard carriers. These are your Liberty, Hartford, Travelers. Those are the typical. Then they got what they call surplus line carriers. Those are the guys that meet the market demands that are not being fulfilled by the carriers. So let me kind of change the philosophy. You're talking about the riding and all that. Well, let's look at the hailstorms. In the Metroplex, for example, we are constantly being bombarded. And I'll give you a perfect example of how the industry adapts to it. Right now, a lot of the commercial policies that are not standard, if you're in Collin County, which is Frisco and all that, you're going to get higher deductibles because the frequency is higher than that of possibly in Dallas. Or they may choose that they don't even want the exposure. I've seen now deductibles have gone as high as 5%. And when I say 5%, it's 5% of the dwelling coverage. So if you got a building at $500,000,
that's $50,000.
or 25.
Well, 25,000 on $500,000. Yeah.
I know the other 25 is for you, right? No. But yeah, so this is how the industry works back and forth, and you have to learn to be nimble to be able to go back and forth and figure out what is a possible solution. So as much as I can say that, okay, I'll get clients to come in and they have a standard policy, but they feel it's paying too much. But the only options that they have is at higher deductibles. In my opinion, if it's not that significantly different, I tell them stay put because, look, if you got one that has a $2,500 deductible instead of $25,000, it would take a huge difference and over several years to justify taking that exposure in my mind. I know the carriers don't like saying that, but in my mind, to take that additional exposure, it just does not make sense.
I guess where I'm going with this is I've been reflecting on, the rioting going on, and there seems to be a relatively high correlation between the fact that most of the cities where this is happening, in fact, as far as I know, all of them have long-term, Democratic and liberal sort of political bases growing. And I'm just wondering if you could ever see a correlation existing between that aspect of our society and the rates or the risks that insurance companies are having to rate for. Has that ever even crossed your mind, or has that ever been a conversation that you've heard where there's in effect a risk that's associated with political risk? I mean, if a business was going to do business in, say, for example, Canada, which is a foreign country, there's a political risk associated with doing business in Canada. On the flip side, if you go to, say, Colombia or Venezuela, there's a political risk associated with doing business in those countries. And so the question kind of becomes, is there a political risk assessment component that insurance companies look at when they look at rates anywhere inside the United States? They look at that aspect for coverage outside the United States. Do you think that they do that, try to make that assessment inside the United States?
I mean, as far as for political reasons, no, they're not using that at all. It's just mainly based on the loss ratios. Now, it may seem to some that it could be, but if they look at it, it's a high area of claims and frequency. That's what they look at, those numbers on that situation, because there are older cities around the country that don't have this kind of problem, and they still get, here's an example. One time visiting out in Boston, and I decided to go travel around because I like to see the buildings and all that. And I saw properties built in the 1800s, and they were fully insured on liability plus the property. I mean, for fire and all that stuff. You come to Dallas and try and find something that's in the 1800s, they just won't take it. I mean, understand the market is too old. They don't believe, because it's just the way the culture is set up there. Northeast, they're used to having this. They have the properties that were built differently than what we see out here. Here, I always make a joke, lick it, stick it, and they're ready to go. Boston, I mean, I saw one that was 1820 something, and it was as standing as strong as anything up here. So the only thing they can go off there most of the time is the claims. And that's the only way they really can do it on that situation, because regardless what party's in there, what happens out there. I mean, what we're seeing in some of these cities is that, seems like it's quite a bit, but it really doesn't happen as much as we think it does. Now, because what we haven't seen is the normal break-ins and all that because of what's been going on. So as far as using political views and all that, no. First of all, I couldn't. So, but as far as that, vandalism and all that in there, they're covered. Can it cost them more? Can Portland see higher rates down the road? Sure, because what was once, say, in a year they had, I'm going to just use as a group, $10 million. Now they've got $100 million. Well, the carriers are going to have to make it up.
What you're kind of saying is, like, if Collin County, Texas had an unusual spring where we got hit with 10 or 12 or 15 massive hailstorms, you're basically going to see a rate adjustment over the next 5 or 10 years to compensate for the losses, as opposed to saying don't go to Collin County because everybody in Collin County attracts hail. It's you're basically going to see an after the fact adjustment based upon the loss ratio, as opposed to a forward thinking adjustment based upon some factor that may or may not have a correlation other than one assessed during a political season, right?
Correct. I mean, and actually, Collin County has been going through that higher rates due to the hailstorms. They have been seeing it now. It looks like the market is flattening out a little bit up there, because the biggest one was the auto market was just increasing like ridiculous amounts. Now it seems to be flattening out, if not coming back down again. So yeah, they can assess it by the county and say, here's where the hailstorms are happening. We're going to charge more. You're going to have higher deductibles for the time being until things change. Because it wasn't that long ago where Fort Worth, Tarrant County, all that area out there was the ones seeing the most hailstorms, and their rates were always actually they were one of the first ones to go to the 1%, then the 2%, and some of them want to go to 3% deductibles. So with all that being said, the market adjustments have to happen, and this is what I was talking about. Our companies, we have to learn to adjust it. If you're, for example, when I was with Allstate, you only had one rate, you only had one company. You take it or you leave it. Being TWFG, we have the opportunity to see if there's any other options. There may not be, but at the same time, there might be, and that's what we try to offer our clients.
What do you see as the biggest challenges coming up in the next few years for the insurance industry?
Right now, it is technology. And when I'm saying that is these cars, and here's an example, a car 5 years ago, you hit the bumper, $1,000, $1,200. Now you're talking $4,000. 5,000 because all the sensors that are in there. And this applies personal as well as commercial, because the trucks now are the vehicles for commercial vehicles are getting just as sophisticated out there. I mean, there's more gadgets out there, so they have not been able to keep up with the changes that are being going on. The biggest challenge I see, like on personal auto, is if they go autonomous. If all of a sudden there is no driver. So there's a lot of questions being raised. Who is going to be responsible for that claim? Because we've already seen it where some of them have had accidents. So is it the manufacturer? Is it the people with the technology? Or is it still that person that bought that car to have somebody drive them around? So that is probably the biggest challenge that's going to be coming out to all agents. Because all of a sudden, if it goes autonomous, now we're still talking 20, 30 years down the road, because people like you and I, we're not going to give up our 455 horsepower car that's sitting in our garage that we saved it for 25 years. But at the same time, the newer generations are quickly to adapt to it. So there's going to be a mesh there, and that's where I think a lot of agents are going to have to rethink about the personal lines, what they're going to do.
Right. All right. Well, Carlos, thank you for making time today. So folks, at the end of this video, you'll see contact information for Carlos. If you have a commercial insurance need or any kind of insurance need at all, Carlos, if he can't help you, can steer you in the right direction. Carlos, thanks for making time to have a little chat today. Appreciate you very much.
Thank you.
Cheers.